Lars, I actually received some other copies of your book that is going to be published by the CITIC Press in China as well. I noticed that you've written quite a number of books. I think altogether, if my memory serves me correctly, I think you've authored probably 17 books or so, and eight of them have been published in China by the CITIC Press.
Yes, that's correct. And I think that's one that was published by another publisher as well. So I think it's nine in total. But yes.
Wow, very impressive. I think I wrote the introduction or the recommendation for one of your books that is being republished again in China. It's called The Business Cycle.
Yes, so the business cycle, this is one of the books that that I took a long time writing.
Yeah,
Yeah, but you probably, if you actually, if I don't know how if you read all of it or how much, but uh, there was a lot of investigation I had to do, and so a part of it was obviously factual, just get all the theory right. But at the end of it, I didn't want to write a boring book. And then if you want to make it more entertaining, you have to find all these true stories, anecdotes, and create a narrative around that. And that took some time. So
yeah.
yeah, it was a bigger work.
Yeah, I have to say that it's very prolific, for any author to achieve this many books in such a short period of time. And also, I think many of them are bestsellers on the charts as well. So congratulations.
Thank you
And I'm
very
pretty
much.
sure that, your upcoming book, Hyperintelligence, will be a bestseller once again in China. So, so let me first by asking, like, how do you come up with all these ideas? How do you come up with the ideas what to write, and also whether your 17 of your books, whether they are interconnected, whether they have a unifying theme about how you see the world, your perspectives, and your series.
Well, they have, so, I'm not writing books for a living. I do other things, but I
Yes.
do like to write, and for me, it's a way of learning. So it's been to a large degree self-education. So I have encountered some subject in my life that I got curious about, and then I didn't know enough. And I think that very often you are most efficient writing a book just after you learned about the subject because you can remember how it felt not to understand it. And
That's right.
so if you've been in a subject for 20 years and you start to write a book about it, you know too much and you assume that everybody understands these things. So I'll give you an example. When I graduated from university, I started working in marketing, and then I thought I needed to understand market research better. And then I asked the institute leader from the university if he would write a book about market research with me. But it was because I needed it for my work, and I was super motivated. Then I wrote one about marketing planning for the same reason, and then I was transferred into the financial section of our company, which was very, very active in trading. And I didn't know anything about financial trading. And then I started going to libraries and reading about it. And I wrote The Psychology of Finance. So it's been like that. There's never been a clear plan for I need to write all these books. But sometimes when you write a book or study a subject, you answer a lot of questions, but within the process of making the book, something else turns up where you think, actually, I should also at some point go into that. So yeah, it's just one thing leading to another.
Yeah. Well, because your upcoming book is about hyperintelligence, right? So by looking at the title, one couldn't help but sort of make a connection between hyperintelligence, with one of the sort of the biggest wave we've seen in recent years, which is the artificial intelligence, right? So, is there any difference in terms of concept between your hyperintelligence series and the AI, the artificial intelligence series?
Yeah, so I've written three books earlier where I wrote about something about AI. Two
Hmm.
books at the same time. They're both called Super Trends, but they were actually two very different books. And then a third one called From Malthus to Mars. And and then I was approached by a gentleman called Daniel Käfer, came from Meta. He was working with me on some other projects, and then he said, "Shouldn't we write together a book about the future of technologies and what they will do?" As I said to him, I've kind of done this 3 times. There's a risk that it becomes just the same book. So I didn't say no, but I didn't say yes either. And then I have this friend in Denmark. So I live in Switzerland, but I have friends in Denmark, and I have this friend who's a former Navy SEAL, tough guy, and he runs management training. He has a big management training company, and he does a lot of fitness training, and he does it with, he did it with the chief technology officer from Deloitte. And then, so he calls me and said, "Lars, you've got to meet this my friend from Deloitte. His name is Jakob Bock Axelsen. You'll have so interesting discussions." So he arranged a dinner for us the next time I was in Copenhagen. And then the dialogue between Jakob Bock and I was really, really interesting. So Jakob has 5 academic degrees. So he's a physicist, biophysicist,
Wow.
mathematician, philosopher, and economist. So you can imagine, we went like, they were talking about everything and anything for about 3 hours, and I came out of that dinner meeting like, whoa, this was really really fun. But during the conversation, I did mention to them that there was this idea to write a new book about the future, and I was hesitant because it would be too similar to what I've done before. Then a couple of days later, I get a message for Jakob. He just writes, "You should call your new book the Cosmic Evolution of Genius." That was all he wrote. And then I write, "But what do you mean?" And then he calls me up and said, "What goes on with AI, and also quantum computing, but mainly AI, is just a repetition of processes that have happened in the universe before. It's a part of a much bigger story about how complexity and intelligence evolves in principle." And then he referred to some of the things we had discussed at the dinner, and I thought, this is a new book. This is one I would like to read also because there's a number of things in it that I don't know well enough. I know something about them, but I don't know them well enough. So I go back to Daniel and said, "There's a new idea that, okay," so we changed the scope quite a lot. We have a third author. And it became a super interesting process because at the end of it, you sit back with a feeling of you're a part of a very big story that you didn't know.
Yeah, very impressive. Well, I have to say, I read your book briefly before the interview. I don't claim that I understand it correct, completely, because some of the concepts that you discuss in the book is sort of brand new to me. Especially, I've been in economic research for most of my life, and now I'm a hedge fund manager. So, if possible, could you take me through some of the main ideas that you have in the book and probably explain, what is the cosmic, you call it the cosmic intelligence, or it's happening in the universe. So I don't claim that I understand it completely. So if you could you take us through some of the key concepts in your book?
Yeah, certainly. So the story starts 13.8 billion years ago. So it's a very long story where we have the Big Bang. And so scientists believe that they understand what happened quite well. So in the beginning, well, they don't know why it happened, but there are some theories about that. But the Big Bang begins with super intense energy, and then space-time starts to expand, and energy converts into particles. And within the first second, a lot of things happen. So you get this soup of superheated subatomic particles. There's no structure in that. There's no intelligence in that at all, like none. So if we just make an observation that here we are, you and I, working with super sophisticated technology to speak across the globe, and you and
That's
I
right.
are very, very complex biology. So we have to explain, how did we get from no structure at all to this highly, highly complex structure that
That's
this
right.
that this conversation and Zoom and everything represent. So what happens is that when you have very high density, you there's a tendency that you start some complexity cascade. So the first thing that happens is that some of these subatomic particles, they are able to merge into helium and hydrogen. But that's all. Those are the only atoms, and then tens of millions of years passes, and you just have this soup of that. So there's no complexity in that. But then you get stars. Stars takes a long, long time to create a star.
Yes.
But inside stars, you get very, very high pressure and density. And that means that the more complex, the bigger atoms starts to form, especially when stars explode or sometimes run into each other. You get extreme conditions, and then it creates all the entire periodic system of atoms. And now you have the breeding ground for some complexity because the atoms can form into molecules and so on. The next big step is the formation of life, and there's almost universal agreement among natural scientists that it was thermal vents down at the bottom of the sea that had all the conditions for creating life. Then we go into the evolvement of brains, and then technology and civilizations and so on. And in every single case, what happens is you get critical density of something, and that starts a new complexity cascade.
Yes.
But there's actually this is an interesting story about how AI works. So we used a lot of AI's prompts
Yes.
to make sure that we didn't overlook anything. So right at the beginning of writing this book, I so normally I talk with AI. So I say to GPT, so we're going to write this book about the evolution of complexity and intelligence in the universe.
Mm.
Can you suggest a structure where you divide it into different phases?
Mm.
And it does that pretty well. I mean, our structure is
Wow.
not very far from what it does. That was impressive in itself, I think. But then it says you should just beware that there are two outcomes of complexity. One is a definitive outcome, and the other one is an outcome which in itself can create more complexity.
Right.
And it says life is the beginning of this, where the outcome in itself creates more complexity. And I thought that's remarkable. I didn't ask about that, but it thought it thought I should know. So I mean, it's not all prompts that surprise you in that way. Sometimes it goes the other way, but um, that made us include in the book the history of the infinite monkeys. So that there's this idea that if the universe consists entirely of monkeys that are typing on old typewriters,
Mm.
sooner or later someone will write Hamlet by Shakespeare. And so somebody have said that, and then scientists have looked into the probability of that. And the probability is so extremely low that you need to have infinite number of parallel universes completely full of monkeys for trillions of years. So uh, and yet, with some, we had Shakespeare, and he did
Yes.
write that fantastic
Yes.
piece. He actually wrote a lot of pieces, and that is because that it's not Shakespeare is the result of a dynamic process. It's genetics, which has evolved humans and brains and so on.
Mm.
So it's a description of this, and so we take it to the present day, but then we start to elaborate or extend into the future and say, so what is likely to happen? And so there are many interesting implications of that, including, something that's investment relevant
That's right.
for the next 5 years, but we are also interested in the big picture. And if you go to the big picture, you can say that you and I, as people, as human beings,
Hmm.
we are the product of critical densities before. We could not exist if there were no stars, because most of the atoms inside our body comes from stars. About 20% of the body weight was made at the Big Bang within the first second, but the rest were made by stars. We needed this in order to become possible. We also needed the thermal vents in order to make living cells possible. We also needed some critical innovations, which were control of fire, beginning to trade, and sophisticated language in order to, become a sophisticated species and so on.
Yes.
But we don't need any of the previous preconditions anymore. So we don't need stars anymore well, we need them for light and
Mm,
power, but we don't need them to create the atoms. We have the atoms.
mm,
We don't need the thermal vents. In fact, thermal vents cannot create life on Earth anymore because we have
mm,
oxygen. That makes it impossible. So the logical conclusion is that AI, which will within a few years become what the insiders call innovators. So they will be able to act independently, take initiative, and solve complex tasks without guidance. Will not need us. Doesn't mean that they will destroy us. I don't think that's
mm.
likely at all. But they don't need us, and they can spread on. Humans are not able
Yes.
to travel much in the universe. It's biologically impossible to survive. But AI and robots can. So it can be that we have set in motion something that will create what, if you want to use grand words, that we have sown the seeds for a cosmic consciousness, that
Yeah.
I will spread out in the universe and begin to understand everything, and to a point where you can say that the universe is conscious. So I am conscious, but that
Yes.
doesn't mean that my fingernails are
Mm.
have they I'm conscious. My fingernails are not conscious, but there's consciousness inside my body. So if there's a widespread consciousness inside the universe, then you at some point you can say the universe or the cosmos has consciousness. And maybe this is what we're creating right now. So big story. And I would say that when we were writing this book, in the beginning, you're just nerding with details,
Mm.
but at some point you start to think it's actually a really big story
Yeah, it's
we are
huge.
a part of. Yeah,
It's huge.
yeah.
Well, given that, like Lars, it's a very interesting theory, right? And then also, it's sort of happening as we speak, because AI is advancing so fast on a daily basis. And indeed, I agree with you that we're creating intelligence, awareness, consciousness out of our own body, physical body, and probably going to spread it, throughout the universe in the coming future. And also, because in such a system, I think the complexity would increase exponentially. Right. So, and also, even as we, even even though the AI is still at the infant stage, sort of infant stage, currently, it's already able to create a lot of things that previously unimaginable. Right. So, given that the complexity is gonna surge exponentially and also spread out through the universe, should we, as a human being, sort of be fearful of such futures? Because there would be so many things that is out of our control.
So I think with any new radical technology, there are reasons to be fearful, but history so far has taught us that on average, virtually all, if not all, new technologies end up being a net positive for mankind. And my inclination is to think that this will be extremely beneficial for mankind, and we have much more reason to be positively excited than to be scared of it. Doesn't mean that we should not address how it can be misused, or just get out of our control and do bad things. But overall, I think what I just described in very grand terms about giving the
Mm,
universe consciousness,
mm.
what will happen much earlier than that is that it starts to give intelligence to things. So it's a little bit akin to when um, the Earth had plants but no animals.
Mm,
Once it got animals and nerve systems and brains, you had you had these creatures that made smart decisions. So you'll have technical devices that make smart decisions, and it's going to go quite
right.
fast. There's a one point in a book where we refer to a study by Citibank. It came out in December 2024, and there they predict that by 2050, so 25 years from now,
Hmm.
there will be 4.1 billion smart robots in the world. So smart robots are like the likes of Unitree and all the great
Mm.
robots made in China, for instance,
Yes.
but also self-driving cars. Many of them will work in a home, where they will be very welcomed, I think. But we should be aware that many of them will be smarter than us, at least
Yeah,
in some tasks. We are already at the verge where self-driving cars
that's
are
right.
more safe than cars driven by people. So,
Yes.
okay, so to put that into perspective, so 25 years from now, the global
Mm.
workforce will probably be 3.5 to 4 billion people actually
Hmm.
working. Uh,
Hmm.
but when you are part of the workforce, you don't work all the time at all. I think the Chinese work quite a lot, but But well, we do have free time. We have weekends. We get ill. We have transportation time and so on.
Mm.
So maybe we work, I don't know, 15, 20% of our time when we are in the job market. And a lot of our life, we're not in the job market. We're children, we are retirees, and so on. So on average, a human only works 8% of its lifetime. Now, these smart robots are at least capable of working close to 100% of the time. So if we think about that, then we can say this mechanical smart workforce might, in fact, effectively you work 5 times as much
Mm.
combined than all human
Mm.
workers in the world in 25 years from now. So, as a macroeconomist, one has to think about this. This must change the structure of the world economy.
Mm.
So it's not that we have to some degree been there before, because the Industrial Revolution and some things that came before it obviously made us far more productive. But this is different in the sense that they will have their own decision power. And if we look at how AI is expected to roll out
Mm.
within the next 10 years or less, you will have one breakthrough after another. And so I referred before to this term called innovator. So I like to just go back to that because um, in the fourth quarter of last year, of 2024, we got OpenAI O1 and O3, which were what you call reasoners. They work like an academic, they
Mm.
iterate, they used like a scaffold to present the results and so on.
Yes.
So you can give them a complex task, and sometimes they work on it for a long time, and then they come back with a very well structured answer. But you cannot take. We are not in a situation where we can take a number of AI models and AI powered robots and say, build a new car company,
Mm.
invent a great product, launch it, do everything. But in terms of technical capability, people call that innovators. They're self-motivating,
Mm.
self-managing reasoners, really. We expect to see that within 3 years, so in like 2028.
Mm.
And then we have the precondition for something where they really start to evolve by themselves. Before that, we already see now the first elements of AI coding AI. We'll surely
Yes.
also see robots building robots.
Yes.
So it will take its own life and become an extension of the global workforce. And you can think of it in a special way. So we are familiar with the term cloud computing. We
Yes.
put stuff out in the cloud, and it works
Yes.
for us. But you can talk about the human cloud. This is the availability of human workers. In many ways, people already use that as a cloud because we put things out on a platform and say, I want this
Mm.
done.
Mm.
design a logo or whatever, and somebody bid for this task. But when it comes to designing a logo, of course, it's actually easier to do it with AI. So we'll have the human cloud, we'll have the AI cloud, and we have the robotic cloud. And we'll have organizations that find it much easier to have a very fluent structure where you just say, here's a task. We just lay it out in the ether. Humans, robots, and AI models can bid for solving this task. A task is solved, and once it's solved, they all move on to the next thing. So this is a complex gig economy where an ever increasing part is machines, not humans. So
Yeah, yeah.
so
Well, yeah, I saw Elon Musk posted on his X account. I think earlier today, he said, someone left a message for him saying that, wow, if we get so many robots, then, the unemployment situation could be quite severe in the coming years. And then Elon replied, saying that, wow, if that's the case, then there will be abundance of supply and abundance of output, and therefore everybody will be so rich that we don't have to work anymore, and there will be like free healthcare, free social benefits for everybody, instead of minimum wage, etc., etc. So he's actually very optimistic about the future of AI and also and also robots, and also I think he just announced open source on Grok 2.0 for the entire world I think earlier today as well. So that's quite phenomenal. I'm pretty sure that Elon Musk single-handedly created, well, give rise, help creating the Chinese EV industry and also the Chinese AI industry, because many and the Chinese robotic industry, because many of his inventions are open sourced. It's quite amazing and very generous of him, and so that the Chinese scientists can actually learn a lot, by standing on the shoulders of a giant. I think going forward though, Lars, because I also agree with you, in the sense that in the coming 25 years, then probably the productive robots, would be joining the workforce and then helping us to work. But then at the same time, recently we're seeing very significant advance in AI technology, in the sense that some of the AI robots, some of the AI language models, they were able to solve very complex mathematical problems that is previously unsolved by a human being. Right. So it seems that they have a mind of their own. And it seems to me that, we're actually creating something that is more intelligent, substantially more intelligent than we are. Right. So I think, there is a risk that, as these things grow, also grow by themselves, then they become sort of significantly, even more significantly intelligent than us. And also, they were able to hide their feelings, right? Because I noticed that sentiment, is, one of I think in one of your books, you talk about sentiments and how sentiment actually affects the business cycle. So then, if in the coming future, we're seeing significant increase of supply, and also we're seeing significant beings that are probably more intelligent than us and probably would be able to hide their feelings from us,
Okay.
then then you see what I'm going with this, right? So I'm just saying that, yes, the future becomes optimistic in the sense that, we would have materialistic abundance, but then at the same time, we have a group of beings that is probably out of our control. Then, in so doing, say for example, on from one angle, right? So would that sort of iron out the business cycle? Because now that you have abundance of supply, you have all these robots working for you for free, and they will be able to work 24/7, and therefore, on the supply side of the economy, you will have abundance of supply, and also, you probably don't need that many workers anymore. And in so doing, are we going to iron out the business cycle from here onwards? And so if so, then is it going to change the way we analyze, how the economy works?
Yeah, so I don't want people to iron out the business cycles because then they'll stop buying my book. So, no, so what you said actually, there are a number of things I would like to comment or elaborate on in what you said. And the first thing is about going into hyperintelligence. So I do a lot of speeches, and I see what people are writing on social media and so on. And I think there are some misconception among people who are not deeply into that, and also many people who comment on AI don't really use it. So many people say it's not creative. It's highly creative.
Yes, it is very creative.
Yeah, just ask, describe a business plan and ask it to come with 10 slogans, 10 company names, and you can see
Yes,
how good it
yes.
is. And we used it for our book, where every time we have written a chapter, we used it to suggest some cool headlines, subheaders,
Mm,
and it did that super well. Um, but another thing people say is that it only knows what we tell it, and that was true in the beginning, but we are already getting very far from that. So it
mm.
does self-play, and the first time we saw self-play that also demonstrated how it can be creative was in this AlphaGo against Lee Sedol, where
Yes,
it made this famous, was it the 53rd move? And everybody were like, what is it
yes,
doing? And it turned out to
yes,
be ingenious and actually
yes.
changed the way humans now play it. So self-play is enormous. If you take Waymo, the way they train cars,
Hmm.
99.9% of their training is in a virtual world, so a meta world, which runs 35,000 times faster than the real world. We have self-play in protein discovery, where it does that several million times faster than humans have done experimentally, and so on. You have in macroeconomics, for instance, you can use what you call system dynamics, where you map the entire landscape of possible outcomes if you combine different things, for instance, different tax levels and so on. So we will increasingly see, for many, many different reasons, AI having more knowledge
Mm.
than any human have ever inputted, and of course, way, way, way more knowledge than any human can store in its own brain. Insights, seeing combinations and relationships that no human can see or
Mm.
have ever seen, but also wisdom. So the ability to see, what is the wise choice in the light of where the world is going. And another thing that also will support its increasing superiority is that it can already collect data from IoT, Internet of Things. It can collect data from financial transactions, statistics, and so on. But once we have a mass market for robots, um, and we already are beginning to have that with the Tesla cars that are creating this collective knowledge about how to drive. But if you have lots of robots doing thousands of different tasks in the real world, and as the real world emerge, their knowledge about it also emerge. If we can collect that and put that into AI, then we'll learn a lot all the time from all those. And let's bear in mind, we talked about more than 4 billion in 2050. And then there will be something that hasn't really taken off yet, but I think is on the verge of doing it. It's personal AI that, on your phone, you have this AI that is your
Yes,
mentor, guide, instructor,
that's
motivator,
right.
everything. And then there's a technology called federated learning where you anonymously can give the insights into you to an AI, and it can use many anonymous inputs in order to understand humans and
Mm.
sociology and so on better. So, so that's a part of what you say. Then, when it comes to business cycles, um, I will defend my book by saying that in the description of book, it at some points it highlights, especially there's one fairly short chapter that summarizes what are really the essentials of why there are business cycles, and it highlights that lags, decision lags, or process lags are very important. And the biggest and the classical example is the property markets, where let's say there's a lack of supply of some kind of property in some area,
Mm.
and clever industrial entrepreneurial business people say, okay, let's build some offices or whatever. Okay, so they start planning, they buy land, they make plans, they submit plans, they get approval, have architects, they start building, they furnish, and then they start renting out, and the whole thing takes 10 years or whatever. What each of them don't know is that there are 10,000 others who had the same idea. So suddenly they all come up with all this property, and then it goes from being too little to being too much, and then nobody
Mm.
builds property for the next five,
Yes,
6 years. So China is in the middle of that right now,
that's right.
and I can see how AI can make an instant approval of a business application, and I can see how there are different phases where you can speed it up with robots and other technologies. But I still think you will have this problem. So what I think will happen is that the business cycles will become a little bit shorter on average.
Mm.
So right now we have in the book I divided into three kinds of cycles.
Mm.
It's not because I just want to divide it into three. I think that's the ones that are really meaningful to talk about. There's the inventory cycle, uh,
Yes.
on average like 4.5 years. It's a very mild cycle. Some people call it mid-cycle slowdown, not really more than that, or soft patch. I could imagine you have used that term yourself many times. So I think that cycle can become eliminated almost entirely by AI, because you can become much better at predicting demand, day for day,
Yes.
hour per hour. Then
Yes.
you have the capital spending cycle, which in some cases is quite driven by specific innovations. I don't think that will be eliminated. It There will be some more efficiency, but there will also be more intense innovation. So I think
Mm.
we'll keep having that. So that is on average 9 to 10 years. And it's important. It really moves market, especially sector-specific movements can
Mm.
be quite substantial. And then
Mm.
there's the property cycle, which is on average like around 18 to 20 years.
Yes.
And by the way, if one hears this, I said 4.5 years, 9 to 10 years, 18 to 20 years. Doesn't that add up? Like one property cycle is two capital spending cycles and
Yes.
four inventory cycles.
That's
Yes,
right.
it does, and that's because of a phenomenon called mode locking, where even if each of them might by itself prefer to have a little bit different amplitude or duration, they tend to lock into this pattern. Not always. I mean, you have exceptions for different reasons, but the averages over the last 200 years have been quite consistent across nations and over time. So it will change something. But then you also said, can we predict them better? And there are different technologies to predict better. For instance, right now everybody's staring at the U.S. inflation, and and then people are talking about, yeah, the next inflation will be so and so because includes a quite high inflation number from the autumn of 2024. But that's if we are looking at 1 year inflation numbers to find out whether there's an inflation problem right now is like stupid because what happens last year is irrelevant for what happens right now and
That's
what
right.
will, and that's why we have real-time indices like Trueflation where they are calculating day by day what is the annualized rate right now, and you can look at 1 month,
Hmm.
3 months, and so on. And you have
Yes.
GDP now, and China has many similar real-time indicators. So I think that we will become much better at algorithmically merge
Managing. Yeah.
many different kind of indicators, and then
That's right.
come to an enlightened conclusion about what is the situation actually right now, and then also predict better what is likely to happen. For instance, there are forward-looking indicators for rent, shelter in the US.
Yes.
Shelter is about 40% of core inflation. Uh,
Yes.
and if you can see that these are actually pointing down, then you can predict that this will drag down core inflation and headline inflation in the coming quarters and so on.
Yeah.
And also I mentioned earlier that you have this system dynamics where you can map entire potential landscapes. So if we combine the real-time data and the very, very sophisticated simulations we can do with AI, we will converge on the perfect modeling, which might still be wrong because of some random events, but it will be highly professional.
Yeah, I think this kind of analysis is actually happening in China. The pig farming industry. The pig farming industry in China used to be very sort of sporadic. A farmer's household would raise three pigs, five pigs, and then the household would sort of slaughter the pig when the pig is mature enough, and then sell it for money. And because the decision is made by individual household basis, then you can tell, right? So when the
But
pork price rising, then everybody rush to raise pig, and vice versa. It creates a huge boom and bust cycle in the pig farming industry in China. But I
yeah,
think these
that's
days,
the cobweb theory,
web theory,
and
yes,
it came from Einarsson's
that's right,
shipping cycle. And
that's
so you
right.
talk about the shipping cycles and the hog cycles.
Yeah,
Yeah,
but now it's sort of, the pig cycle is less prominent these days, because firstly, they industrialize pig farming, right? So they create very large scale pig farming, pig farms, to
Mhm.
raise thousands, if not tens of thousands of pigs. And then they sort of time the cycle very, very well, because, they know the gestation period of a pig, and how many months would it take to grow from a young pig to an adult pig, etc., etc.
When something expands, it means that the society benefit, but there are none of the actual providers of the technology that have any great gains. A horrible example is the Gutenberg who introduced printing to Europe. He actually went bankrupt. So you have to think about, first of all, can it benefit the companies that roll out this technology, and where is the value capture? And I think it's a very interesting discussion right now with AI, because if you take the large LLMs in the US, for instance, they are pumping massive amounts of money into this, but they have no moat. So I'm not sure everybody
Mm,
knows the term moat, but in an old medieval castle, you would have this water around it,
yes,
defense. And Warren Buffett, he always talked about. I mean, he doesn't want to invest in a company that doesn't have a moat. So the moat can be patents, it can
that's
be
right.
network effect, it can be brand, or it can be some kind of in critical mass. So I right now I'm paid subscriber to Gemini, Google, excuse me, Grok, and GPT, so OpenAI, and it's completely random what I use. Sometimes one of them seems to be in a bad mood, I switch to another. There's no network effect. And there are many other models, and I have friends who use other models and so on. So it's not super clear to me that some of these companies will be able to make profits that justify the valuations they have. So many of them are not single place, but OpenAI is a clear play. So where I personally think that most of the value capture will be in terms of profit in the commercial environment will be so domain specific. So it can be an implementation in a life sciences company, a pharma company, can be in a bank, in a hedge fund, places like that. And a lot of it will be agentic AI. So if you go to a website like
Mm,
hockingface.com, it has, by the end of this year, probably has 5 to 6 million different agents and transformers that you can download mostly for free. So the people who are good at combining these in order to solve specific tasks in specific situations can create enormous value. It can be existing companies, or it can be startups that see a profit pool and find out how to grab it.
Yes.
So right now, the bubble centers of the how fantastic the LLMs are, and I would say that. So actually, so I don't think we are in any major bubble right now. I don't
Mm.
if what you think about that.
Yeah, great to hear that. Well, I think, we have much further to go from here. I think, prices is gonna rise. I think prices are very
Yep.
expensive right now. They're not cheap, but I think it can get even much more expensive than what it is now. And because we're entering in the stage where we haven't seen anything like this before, right?
Yeah.
So, for example, the agentic technology that you mentioned, right? So some of the computer programs can actually do things for you. And you respond to emails, for example, schedule your itinerary, telling your assistants what to do, etc., etc. I think back then the idea of having an agent on your computer has been sort of enticing. Well, has been quite productive, right? So back then, way back when we were able to program in Windows and ask Excel and Word to do, email responding, et cetera, et cetera, for us, and also run some program periodically to update our numbers. Those are sort of the basic, sort of entry level agentic technology we had back then, and it's already helping us to improve productivity. I think one can only imagine what the AI technology can do these days. So I would say that even though valuation, especially in the US stocks, has been going to a level that is reveling. I think reveling year 2000, right? So, but I think this time around we could see a substantial higher valuation, because the earnings of the big tech firms is just phenomenal. Cash flow is abundant, and the technology is still progressing. Right, it's still bringing substantial change that we haven't seen before. So I would say that yeah, I would agree with you in a sense that there will still be bubble, because the animal spirit is still alive and well, and probably getting even more greedy than before. But then at the same time, prices could go substantially higher from here because we're entering into an era that this is uncharted territory.
Yeah. So I'd like to elaborate a little bit on this with a focus on the U.S. economy because it's very important for everything, but also because
Hmm.
that's where you have these right now the leading AI companies. So
Yes.
so in terms of whether there are signs things that are bubbly, I think, for instance, the valuation of Palantir,
Yeah.
which is trading like after having fallen quite a lot the last days,
Yeah.
is still trading at like 250
Yeah. Yeah.
something like that. Also, when Microsoft have offered salary packages of $100 million, or in one case, $1 billion
Yeah.
for
I
single
know.
people to work for them, it sounds a little bit bubbly to me. But so my view of what's going to happen with that economy is that we might see in the second half a little bit
Mm,
of stagflation, which is a very
hmm.
bad combination.
Hmm.
So there would be some inflation feeding through, but not much.
Mm, mm.
And forward leading indicators have been pointing down for quite some time.
Yes.
So
Yes.
weak GDP and a little bit worrisome inflation. But I don't think the inflation will be very bad. First of all, imports is 14% of the US economy. And if the average effective tariffs will be about 15%. So you multiply those two percentages, you get to like 2%. If it's all feeds into the consumer price as a one-off price hike. But there's many indications that it doesn't. So we see that import prices have actually declined.
Mm,
And we can also see that that importing companies are absorbing also some of it. So very little actually seems to be feeding through to the consumers. Also, when prices of some things rise, it takes it out of the consumption pot, and that means people spend a little bit less on other things.
yeah.
So the prices of that may have a little bit downward pressure. So I think that's been very, very overstated how big the inflation would be. But then, and right now, the fiscal policy is net negative to the tune of 0.6% negative, break on the economy. But that will shift over to plus 0.3% next year, which will be very timely because then you have midterm elections.
Yes.
So so I think we'll go through this soft patch, if I may use the same term as we talked about earlier, with a little bit worrisome inflation. I think the Fed will almost certainly cut in September, and I think
Mm,
that will be beginning of a cautious cutting cycle. But then next year, I think we could have the preconditions for a real runoff to a bubble. And then how long time that takes is anybody's guess.
mm,
Would be 6 to 18 months or even longer. So that's what I think. And then I think that if you listen to Scott Bessent, which by the way,
mm.
I really recommend everybody who are investing to listen to Scott Bessent. Don't listen so much to Donald Trump because Donald Trump is creating strategic
Yes.
ambiguity. But Scott Bessent is actually saying it how it is.
Mm,
Is very, very smart. So,
yes.
so, so he says that within the next 2 years, you will see very, very big investments in AI infrastructure.
Mm,
So this is chips, factories, and of course also energy. So that will be running, will surpassing 1% of GDP. But then he says after 2 years, the effects will really begin to penetrate society. So begin to raise productivity, broadly across society. And if you look at long-term statistics of unit labor productivity in the US, that has been moving in cycles, quite long-term cycles, between I would say the last 40 years or so between 3% and 1%. It's only about 1.2% right now. So most well-reputed analysts that I follow
mm,
predict that it will go up towards 3%. So Goldman
mm,
Sachs and
mm.
Accenture and many others, because of these technologies, it could go higher actually. And that, so I think that we will get into, so we'll go from this uh, like 2 quarter deflation thing to a Goldilocks economy, where you have accelerating productivity, you have downward inflation pressure on lots of goods and services because AI and robots can produce them very, very cheaply. And you will have central banks trying to counteract this downward pressure by printing more money, and some of
Mm.
this money will then go into assets.
That's right.
And this is a concept, it's described in the Business Cycles book, but it comes from Hamilton Bolton, who is the founder of Bank Credit Analyst. So he wrote about it in the 1960s. So I think
Mm.
that you will see among the secondary effects a commodity cycle. So the last
Yes.
commodity cycle was really good for me. So I really
That's
hope
right.
I hope to see a replay of that. So I was doing tech companies in the late 1990s, and that worked really well. Then when it all it crashed in the beginning of 2000.
Hmm.
Many of the people I had worked with in tech who had made money on stock options or exits, then they put the money back into new startups or technology in general. And because I had a long, many years background in finance, I thought maybe one should look at something completely different. And then I saw these papers and videos by Jim O'Neill from Goldman Sachs, where he was the one who launched the term break. And he said that what is going to happen in China is absolutely enormous in terms of building property and infrastructure, but also in the other countries. It turned out to be almost entirely China. And then he said, there will not be enough commodities for this. I mean, they exist in the ground, but we cannot take them out of the ground yet. And then I started investing super heavily in Russia first, and then in China, and all things commodities, emerging market currencies. And that had the most spectacular run from 2001 to 2008.
Yes.
And so, um, if it wasn't for the collapse in Chinese property markets, which I think we can call it, that we have right now, I think we already would be in a new commodity cycle. But this has been
Mm,
a drag. Um, but China has been very, very good at avoiding a depression. So one of the most surprising statistics you can see about the Chinese economy is the consumption of copper. So normally, if you have such a spectacular downturn in property construction, you would
mm.
expect to see copper
That's right.
consumption.
Collapse. Yeah.
It didn't. It didn't go flat either. It
No.
just
It
kept
actually
going.
making new high.
It just kept
Yeah.
going up. So I have this daughter who has been producing cosmetic products, hair products in China since she was 18 years old. So
Wow.
she comes there like 4 times a year. And I was invited by City Press, of all people, of all organizations, to come and do some presentations in China.
Mm.
And I didn't have time. I had been there many years earlier, but I didn't have time. And so I randomly told that to my daughter, and she said, "Dad, you gotta go. It's amazing how the infrastructure has changed the last 4 years." So I went, and I was blown away. And
Wow.
and what China has done is simply moved capital spending from property into infrastructure, including energy, and prepared itself extremely well for the AI and robot revolution by being the world leader in deploying new power capacity and smart grid. And funny enough, I was a year ago. I was somewhat concerned about the property market. No, yeah, the commercial property market in the U.S. Also 2 years ago. It's been like the weak point, and we can see that after GPT, what was it, 2.5 was launched.
Mm.
The monthly investments in the US on property, commercial property, so in particular offices, has been dropping
Yes.
much like the Chinese,
Like a stone. Yeah.
yeah, like the Chinese property
Yeah. The
market.
Chinese real estate, commercial real estate is not doing well either.
Yeah. But then you have, if you look at then investments in data centers, it has been
Mm.
rising.
Booming.
Yeah, yeah,
Yes.
booming. So they are almost crossing over now. And that
Right.
means if you take the two as a whole, so data centers and commercial property, other than data centers, is flat. So the US is doing the same now as China has done. Numbers are, compared to the economy, are maybe smaller. I'm not sure yet.
Mm. Mm.
Um, and I think that if there are any soft patches in the US, that the massive investments in energy and AI that they're doing um, creates a floor for the economy. And once the soft patches are finished,
Right.
you can have a very good time. So I am
Yeah.
personally, for the next 10 years as an investor, bullish.
Bullish. Yeah. Same here as well. I think, liquidity floats our boats. And also, I agree with you. I think, in general, the commodity sector has been doing quite well despite a falling real estate market here. And I think going into second half of this year, the property markets continue to fall significantly, but then it doesn't stop the Chinese market from growing, especially the new tech sectors. Right? So if you look at the Chinese market this year, right? So even though it return, the mainland Chinese market's return is sort of in the mid-teens, right? So it's not stellar comparing to the rest of the world. But then, if you look at some of the high-tech sectors, the biotech sectors, and also the new consumption sectors, many of them is actually more than double year to date. It's just phenomenal. It's just telling us that the economy is really in transition. It's transitioning into a new growth model that is driven by completely different industries. Like the example that you cited just now, between how the commercial real estate investment is plunging, but then the data center investment is actually surging to cancel out the falling effect from the commercial real estate. Now, I think, because I read more of your economics research books, for example, with the business cycle, and also there's another book about sentiment and
Yeah, called the
sentiment and
psychology of finance.
yeah, psychology of finance. That's right. I would like to sort of ask you that, in this new era, because back then, when we do forecasting, right? So we have all sorts of leading indicators, and we sort of, do some quantitative analysis and amalgamate them into our own proprietary models, and so that we can forecast where the economy and the market would go. And I think in the past couple of years, especially after COVID, many of the traditional correlations between asset classes, for example, actually broken down. For example, you can't use the U.S. Treasury to hedge your risk positions anymore. The U.S. Treasury and the U.S. dollars this year actually become a risk asset for some reason, right? So the historical correlation that we used to observe is not true anymore. Right? So in an environment such as this, right? So I think many of the other leading indicators, many other sort of correlations that have served us well in history probably is not going to work anymore. Right. So in this new environment, how best do we do our forecast? And also how best do we cope with the uncertainties?
Yeah, so actually, I read a very, very good research piece about exactly that the indicators don't work so well anymore. So one reason, so typical correlations have broken down, but also some of the economic forecasting tools have become less efficient. And turns out
That's right.
that companies are are less inclined to answer the questionnaires. So it's simply the data collection is not as good as it used to be. Why that is, I don't
Mm,
know. But so one thing that's really very important for me is that I think technology is more and more important to understand these things, and that's why I founded the company Supertrends, where we map what goes on in global innovation. And in Supertrends, we rate all innovations, and we have 16,000 historical innovations in our database going back 3.3 years. And right now we have 4,000 predictions. And so we're working on an automated system that rate the importance of every new innovation in the future,
mm,
which we'll also try to run for the historical. But so far, I have rated them all. I actually have read them all. And I sit there and I think about, based on all I know, how important do I think this is for the human condition? And what we see is increasingly that some specific innovations they can change the future structure of the world economy. It's very, very important to see. But
mm,
also, in my opinion, important to understand how value capture works and how clusters of innovation work. So we talked about critical density much earlier in this conversation, but when you go through the world history of innovation, you see that the vast majority of the important innovation creates these clusters, ecosystems.
mm,
Very often it starts with one person, then one company, and then
mm,
it builds on itself. You have so many examples. Like there was a time where Vienna was the world center of classical music. Why Vienna? That was just everybody went to Vienna if they were good at classical music. But you have in Biel in Switzerland, they make mechanical watches, and you have
mm.
Detroit in the US and so
That's
on.
right.
And so for a long time, when you have such a cluster, uh, if you want to invest in a company that works in this industry, it's really best that it's in that cluster. Even though somebody may steal its employees, it's still best
Mm,
to be in the cluster. It's very efficient to be in the cluster. However, sometimes somebody who are not inside that cluster get away with making a successful company somewhere else. And that should call your attention because they're probably doing something different. And so
mm,
one example is Elon Musk, who did not start or run a car company in Detroit, but he started one in California, then in Shanghai, then in Texas.
mm,
So different person, different outlook, different way of doing it. And these things are very important to notice and reflect on, in my opinion.
mm,
Um, And there's something about are you familiar with an economist called Carol Quigley?
Yes. So I
Uh,
read some of his work.
okay, shall you or will I briefly summarize
Maybe
his?
maybe you would do the heavy lifting for us.
Okay, so he was the favorite economist of Bill Clinton, and he is certainly also a favorite economist of mine. So he described how some systematic tendencies in how civilizations evolve, how they emerge, evolve, and eventually collapse. And he goes through that being about 200 civilizations in the history of mankind,
Mm,
and very often it's the same pattern that has been repeated for the same reasons. But you can take his theories and apply them also to innovation clusters and to just single innovative companies, in my opinion. And you have to think about whether, sometimes what he says is that what typically destroys a civilization in the end is what he calls over-institutionalization. Very long word.
mm.
That means it becomes too ingrained, too complex, and so on. It cannot move. It's not
Yeah.
flexible anymore. It becomes fragile,
Yes.
not anti-fragile. So the same thing can happen in an innovation cluster, and then somebody finds a completely new way. So if you look at AI, and if you look at IT as a broader technology area, information technology. So the modern technosphere, the modern one, not the ancient one yet that we have in China and so on, but the modern one started really in Scotland, in my opinion, and has spread
Mm,
through Western Europe. And for many, many years, about half of all innovations in the world were made in a very, very little part of Europe, which was Western Europe, from northern Italy up through Switzerland, Germany, England, Netherlands, and so on. Then that civilization spread to North America and to Australia, New Zealand, and some other places. And now the edges of that civilizations are in many ways more dynamic than where it came from, which is over-institutionalized a lot right now. So, and then spread to Southeast Asia and other places. And right now, UAE, Dubai, for instance, is on it, and Saudi is, getting on board also in a big way. So it tends to be most dynamic in the edges. And it's the ones who say, okay, let's start this, but they have some other views. So they learn from what exists, but they also add new things to it that doesn't exist. And I think that's very important in order to understand what goes on, to predict economy, that it's important that we don't only use traditional macroeconomic indicators and the financial correlations and so on, but we also try to open up the hood of technology and sometimes go very deep in and try to understand what exactly does this do and who exactly has an original useful view on this. And then, of course, is the last question is, where is the value capture? Who will make money
Mm.
with this? So I
That's
think
right.
so I do a lot of speeches and webinars and interviews and so on most in Europe, but I've also done a lot in China, doing a lot right now, and in the US. And if I go on a stage or I'm speaking to a group of leaders, for instance, and I talk 45 minutes about the future and technologies, and then at the end I say, "Does anyone have any questions?" Then in China, the questions tend to be, "What do you think will be the hardest area? And if you should invest in this, what would you do? And if you should start a company, what would you do?" America is more or less the same. In Europe, don't you think this is dangerous? And don't you think we are going all getting unemployed? And so there's this. But anyway, so I was talking about how people the attitude to technology, and I just think that China has a very technology positive. It's not non-existent, but it's less common.
Mm, I see. In the new technology world, what would be some of your advice, for the younger Chinese people.
Okay, so the first thing, I have several advices, but they are simple and short. The first thing is to know yourself. I think there are so many tools out there where you can test yourself online, and I think it's really, really useful in this turbulent world that we're going into to try to understand who you really are, and that means also what will make you happy, where can you succeed. Japanese have a term called ikingao, which is about you have to find what you're good at, what you like to do, what you can earn money on, and what benefits society.
Mm,
In terms of choice, maybe if you feel that the education you have taken is somewhat being replaced by automation, I think the hardest area you could possibly go into and try to understand is agentic AI. Uh,
mm,
because agentic AI is a general technology set that can be used to address an almost infinite number of
mm,
problems in society and also create an almost infinite number of new products. So I think that's really, really important.
mm,
And then I'd also, now you and I are investors, and and we like that. So I would say that this will be sounding like a commercial, but I did write a book called Bubbles, Bears, and Bullshit, which is about investments for beginners, and it's out on Citic Press. And if I should think about of all there are many short chapters about different things you need to know. Of all the different things it mentions, there are two things I think are really important. The first one is Siegel's constant. So Jeremy Siegel, he wrote this book, Stocks for the Long Term, where he tracked
mm,
the performance of different asset classes from 1802 to the
mm.
modern days. And he just showed that there's equities
Yeah,
in the long
stock is
term
the best.
completely outperform. I know that Chinese have done less outperformance than American, but still. So the compound return over very long time has been 6.5 to 7%.
Mm,
And
mm,
when you have a big drawdown, it just tends to catch up again. Which brings me to the last one, and that is that if you invest, and unless you are very, very much into it and very smart at it, the strategy I would recommend to use is what you call dollar averaging, dollar cost averaging. And
mm,
that means that you just say every month or every quarter or every year,
mm,
I invest the same amount of money in the same bucket. So the bucket could be the total equity market, or it could be a part of the equity market, or it could be the one bucket is equities, another one is bonds, or something like that. Because it has this smart feature, then when a market in a bucket has the prices have gone down and you invest, you get more units. If it has gone up, you get less units. So without being predicting anything, you end up
mm.
buying more when it's cheap and less when it's expensive.
That's right.
So super simple. And
It's
I think
a
actually
form of contrarian investing.
in a sense, this is what Warren
Yeah.
Buffett does. He just does it from a different perspective. He says,
Mm.
when they're cheap, I buy. I have no idea where they're
Yes.
going, but I only buy when they're cheap.
Right. Very good. Very good. Last, thanks for your time. I think, your advice is very precious for, people who are coming into the society, graduating from universities. And, as you know, the Chinese economy is going through lots of changes and restructuring. And I'm pretty sure that in the coming future, with the complexity and also the genuine opportunities that it's going to bring about by the AI technology, I think, we're probably going to see even more substantial, more significant change in the Chinese society. I think for the younger generation, as you said, know yourself, and also knowing what is important, what makes you happy. And when investing, we do the contrarian thing, right? So buy when it's cheap and sell when it's expensive. Then I think probably more likely than not, people can do quite well following your advice. So I think our time today is almost done. So I am wondering whether you have any final words to say, for this show.
Yeah, I do, because my final words is I wish I was interviewing you. Because I think you know so much that I don't. but another time perhaps. But it was a real joy to
Yes.
be with you. And if I should say a final word about something else, is that we both said during this conversation that we were bullish for the long term. And I
Yes.
think that's an important takeaway for everybody.
Yes. Yes. Thank you, Lars. And I heard that you're coming to China in September.
I
I
am.
wish that you have a great trip, and hopefully I can see you in person in Shanghai when you're there.
I would enjoy that.
Oh, all
Thank
right.
you.
Thanks, Lars. Thank you.
Yeah.